Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to give you my weekly update of my real money portfolio for week 46 of 2021. And the last update is 6 weeks ago, really a long time. I didn't uploaded a video, and first of all I want to say sorry for that, but there was a big personal issues, personal reasons, and that's the reason why I wasn't able to upload new videos. Now everything is sorted out, come back a little bit to normal, and so hopefully I will be able to upload 1 or 2 videos again per week with stock analysis and my weekly update on my real money portfolio. And with this real money portfolio I talk about here every week, normally every week, I have a performance since the start at the 2nd of December 2019 of 59%. But as you can see here on this graph, on this chart, lately it stumbled a little bit, and that of course have a lot to do with my Chinese investments. I talk a little bit also about this in this video. Let's go into my update. But before we start, don't forget to subscribe, ring the notification bell so that you will never miss another video. Thank you. First of all, take a look at the transactions over the last 6 weeks, and this will be a fast run through all the things I did. First of all, I sold Pfizer. I sold Pfizer, my 116 shares, on November 5th for $43.69. And right away after I sold my stocks, Pfizer just started the run to right now over $50. Was maybe one of the worst moments to sell Pfizer, but I did because I just wondered how Pfizer can't perform better with all the COVID problems and the COVID vaccine and the big revenue and the earnings on this vaccine. And so I thought, okay, maybe it's better to sell. Just on the same day, they just published that they have an oral antiviral treatment that reduces the risk of hospitalization or death by 89%. So, and then of course the stock took off, just very, very unlucky. Or in other words, maybe what I learned out of that, never sell a good business even if it's going nowhere for a while. Now it's done. It's fine. I realized around 20% of gains with this investment over, let's say, almost 2 years. That's not great, but okay. And so I'm fine with that. Then I bought new into my portfolio Snap-on. I mentioned Snap-on in one of my other videos before. A great business. It was pricey, so I didn't bought yet. But now it came back a little bit, and so I used this chance to buy into Snap-on. Snap-on right now is traded at $215 with a P ratio of 14 and a dividend yield of 2.63%. Snap-on is just a cash flow machine, and also the price to cash flow ratio with 12 looks quite cheap right now. And so I bought my first 12 shares on October 21st for $216.14 and another 4 shares on November 5th for $211.18. And so overall I invested right now $3,438 into Snap-on for a purchase price of $214.90, and I'm up 0.35%. So nothing much happened yet. I'm quite happy with this buy of Snap-on, and I think over the long term this will be a solid investment. Then I bought more of Facebook, or as it's called now, Meta. Meta Platforms, formerly known as Facebook, is traded at $345 right now with a P ratio of 24. And I analyzed Facebook also in some other videos before. When I calculate the intrinsic value of Facebook, then I come to an intrinsic value of around $400, $420 when I calculated with an expected return of 12%. So for me, it seems like the prices are really fair, still really fair. And then from time to time, of course, Facebook have some problems. There is a scandal here and there, and then always a chance to buy in. And so did I. I bought 3 more shares of Facebook at October 26th for $318.82. And then also lately on November 9th, I bought 3 more shares for $326.65. And so overall, I invested right now $7,690 into Facebook for a purchase price an average of $284.84. And so my whole position is up 24%, and I will hold it for the long term because I think it's just a great business. Beside all the scandals, all the problems they have from time to time, but overall just a great business, and I'm very happy I'm owner of that. Then I added to my position of UHS, Universal Health. I bought 6 more shares on November 5th for $126.19, and the whole position is down right now around 13%. I made full analysis before. You find the video on my channel. It also looks very, very cheap to the current prices. And so I added a little bit more. And I also added more to MI Homes, one of my other companies in my portfolio, one of the bigger positions in my portfolio. And on October 27th, I added 10 more shares for $57.86. And you see here all on the green dots, I add over time. I just think MI Homes is a great, great business. It looked really, really cheap. And so I add more and more around $60. Then come to the Chinese. And here I added to my Baidu position on November 17th. Just lately, I bought 5 more shares of Baidu for $161.94. So also here the position gets bigger and bigger. And also with Baidu, I made a video and a full analysis. And also Baidu looks very, very cheap under this very bad sentiment for Chinese stocks. We will see how this will work out, but I'm quite confident that over the long run, everything will be fine with these great Chinese companies. And so also I bought more of Alibaba. Alibaba lost already 54% since the top with all the problems with China, with the Communist Party, with a trade war, with Taiwan and Hong Kong. There is so much negative sentiment and of course also risk for sure, but all of that leads to this crash in these great companies. And so if you look for news for Chinese companies or Alibaba, then you just find negative news. There's so much negative. And then, of course, last week they also published their Q3 earnings, and this looked also not very good. Earnings per share, or ADR, decreased 38% year over year, at least in renminbi. So also this looked not very good. But then if you look at the revenues, then you see that the revenue improved by 29% from the prior year quarter. So there is still a lot of growth. There's also still a lot of growth in the commercial retail business. There the growth was 16% year over year. And if you look deeper into the numbers, then you see that the earnings decreased, but this is because of investments in other businesses. So overall, even if the growth maybe really slow down over time, and I think it will slow down over time, at these current prices, Alibaba really look like a bargain. And so I bought more shares of Alibaba on November 5th. I bought 5 more shares for $159.94. And then after the Q3 earnings and the big crash, I bought 10 more shares for $147.77 and 6 more shares for $142.95. And so overall, now I have 64 shares of Alibaba, or ADR of Alibaba, with a purchase value of $12,408, or a purchase price in average of $193.88, and so my whole position is down 27%. Quite a lot, but over the long run, I think everything will be fine. Alibaba still is a giant, will grow, maybe not at the rate they did in the past, but still on very good rates. And so sooner or later, the market will see that, and then I think Alibaba will be a great investment over time. Then take a look at the received dividends over the last 6 weeks. First of all, I got $65.72 from Scotiabank, or Bank of Nova Scotia. I received a small dividend from Progressive of $4.42, and I received a dividend from Ledgett & Platt of $28.92. Also, I received a dividend from JP Morgan of $25.50. Next to that, I was also able to deposit quite a lot of money into my portfolio lately this week. So I was able to deposit around $37,000 into my portfolio. So my cash amount just rises up a lot. And with that, take a look at the performance overall so far. First of all, the current holdings in my portfolio, best performing stock right now is the Bank of Nova Scotia, the Scotiabank, with 78% up, followed by JP Morgan, Ledgett & Platt, Coca-Cola, Berkshire, and so on. And at the end, Alibaba, Universal Health, and Tencent. Lately, my stock picks wasn't that good, at least in the short run. In the long run, I'm very confident in all of these companies. Then take a look at the pie of my portfolio. You see the cash with the deposit just rises to 37.7%. So really a lot. And before I said all the time I want a cash position around 20%. Now I have this big cash position of 37%. I will reduce this position next week to around 30%. And it's very likely that I will add to my current positions. First of all, I think I will buy more of Universal Health. Maybe I will add to Intel, which is also again under $50. And then we will see here and there to add a little bit to come to back to a cash position of around 30%. And then over time, hopefully also back to 20%. We will see how I will do that. Overall, of course, the market's still at all-time highs, and it's difficult to find good new investments. And so basically, I will add to my current positions. Here also a view on my closed trades. And here you see I have very good trades with Imperial Oil, Caterpillar, Walt Disney, and so on. And here you also find the Pfizer trade with a gain of 29.89%. And with all of that, I came to the performance of 59% since the start at the 2nd of December 2019. And as I said, this performance would be way better if I wouldn't be invested in the Chinese market, especially in Alibaba. But I think over the long run, everything will be fine. It will be good investment. You just have to be patient, and then the market will react just rational again. Right now, it's very irrational in my mind. And so that's it for today. Next week, I think on Wednesday, I want to make a full analysis of PayPal because I think PayPal could be interesting. PayPal loses around 40% since the top in a very short time. I think it's a good moment to take a look at PayPal and look if it could be a buy right now. So that's it for today. If you like this video, please give me a big thumbs up, subscribe to the channel, ring the notification bell to never miss another video, and then we will see the next time with the analysis of PayPal and the update on my real money portfolio. See you then. Take care. Bye bye.